4 tech stocks that are flying under the radar. Nobody would advise you to buy tech stocks during a recession. That's because stock valuations usually include a growth premium, which makes them risky in a recession. It's better to choose high value and stable stocks instead of high risk ones. However, there are some signs that the tech boom is ending. For example, the PE of tech companies is at its 5-year median, suggesting that valuations have stopped inflating. In my opinion, there will be a lower demand for technology in the coming years, leading to more stable valuations for investors and plenty of opportunities. Technological advances work well in both prosperous and challenging economies. In hard times, they may provide the only way to keep up with growth while conserving resources. With such great benefits, it makes sense that most companies invest in technology. In today's competitive market, some sectors are having trouble with their labor costs and deciding not to fire anyone because they could find themselves needing to hire at higher rates. Additionally, although supply chain issues are beginning to get ironed out, high energy prices mean that input costs will remain high. Due to the pressure to make more efficient and effective use of company resources, fiscal discipline has become a priority. Earnings season will give us more insight into how they're doing. It doesn't look good now. The ongoing earnings season will give us an idea of how they are faring, but currently, we are on the other side of a recession, even if it turns out to be relatively short. Tech valuations are currently low, providing an opportunity to invest. If they do perform poorly in the next few months, they'll likely pick back up in the future. With a 2 to 3 year investment horizon, profits should be good. However, the current market volatility might benefit those waiting for prices to fall further. Concerning the Fed's stance on the economy, this is still unclear. If you want to put something into play, there are a few stocks worth looking at. Number 1, Perion Network Ltd, ticker PERI. The company provides digital advertising solutions to brands, agencies, and publishers, mainly in North America and Europe. In the last 5 years, its earnings have grown 12%, and analysts estimate its long-term growth at 25%. In 2022 and 2023 alone, Perion is expected to grow its revenues at 32% and 16.1% and earnings at 96.1% and 4%. Tip Ranks has a smart score of 10 out of 10. Based on 2 Wall Street analysts offering 12-month price targets for Perion Network in the last 3 months, the average price target is $30, with a high forecast of $32 and a low forecast of $28. The average price target represents a 32.98% change from the last price of $22.56. Perion Network's market cap is currently $1 billion. The company's trailing 12-month earnings per share is $1.57, with a PE ratio of 14.16. Perion Network is scheduled to report earnings on November 8, 2022, and the estimated EPS forecast is 49 cents. I am now looking at blogger sentiment based on 12 opinions. The blogger sentiment is more bullish than other stocks in the technology sector. We are moving on to number 2, Keysight Technologies, ticker KEYS. The company provides electronic design and test solutions to commercial communications, networking, aerospace, defense, and government agencies. Keysight has grown its earnings a whopping 25.9% in the last 5 years. In 2022, its revenue and earnings are expected to grow at 8.8% and 20.1%. Next year, they'll increase by 5.5% and 7.9%, respectively. Analysts peg their long-term earnings growth estimate at 11%, which factors in a significant slowdown, possibly a recession next year. So the LTG could be much higher, as is usually the case. Tip Ranks has a smart score of 9 out of 10. Based on 11 Wall Street analysts offering 12-month price targets for Keysight Technologies in the last 3 months, the average price target is $196.36, with a high forecast of $225 and a low forecast of $172. The average price target represents a 23.26% change from the last price of $159.31. Keysight Technologies' market cap is currently $27.5 billion. The company's earnings per share trailing 12 months is $6.03, and its PE ratio is 25.55. Keysight Technologies is scheduled to report earnings on November 20, 2022, and the estimated earnings per share forecast is $1.99. The balance sheet is also in good shape. The debt cap ratio of 31.4% is not too bad and has been declining steadily since 2017. The net cash per share increased steadily till mid-2021 but has shown a slightly declining trend since then, possibly as it built some inventory. Its cash ratio, at 1.77 times, shows nothing to be concerned about. However, the PE of 25.55 times may not be viewed as cheap by some. Rest assured that it isn't expensive because it is at a discount to the median value of 21.53 times in the last 5 years. Keysight's blogger sentiment is based on 5 blogger opinions. The blogger sentiment is more bullish than other stocks in the technology sector. Number 3, Arista Networks, ticker ANET. The company develops, markets, and sells cloud networking solutions worldwide. In the last 5 years, Arista's earnings have grown 17.2%, and this strength is expected to continue in the future. For 2022, analysts expect revenue to grow 38.6% and earnings to 40.8%. The following year, they expected revenue growth of 13.9% and earnings growth of 13.1%. In the long term, earnings growth will likely settle at 15.7%. TIP ranks has a smart score of 9 out of 10. Based on 17 Wall Street analysts offering 12-month price targets for Arista Networks in the last 3 months, the average price target is $145.69, with a high forecast of $185 and a low forecast of $105. The average price target represents a 39.18% change from the last price of $104.68. Arista Networks' market cap is currently $30.54 billion. The company's earnings per share is $3.24. Its PE ratio is 30.92. Arista Networks is scheduled to report earnings on October 30, 2022, and the estimated earnings per share forecast is $1.04. Like Perion, Arista has no debt on its balance sheet. Its net cash per share has been growing steadily since 2016, although it dipped in the last quarter even as net PP&E and inventory continued to increase. Arista Networks' blogger sentiment is based on 14 blogger opinions. The blogger sentiment is more bullish than other stocks in the technology sector. Number 4, Agilent Technologies, ticker A. Agilent provides application-focused solutions for measuring and analyzing liquids and gases worldwide in the life sciences, diagnostics, and applied chemical markets. In the last 5 years, its earnings have grown 15.4%. Analysts expect its revenue and earnings to grow by 7.1% and 16.8%, respectively, in 2022. Next year, they're expected to grow at 6.5% and 7.9%. The long-term growth expectation is 10%. TIP ranks has a smart score of 8 out of 10. Based on 9 Wall Street analysts offering 12-month price targets for Agilent in the last 3 months, the average price target is $152.78, with a high forecast of $165 and a low forecast of $135. The average price target represents a 17.14% change from the last price of $130.42. Agilent's market cap is currently $37.21 billion. The company's earnings per share trailing 12 months is $4.39, and its PE ratio is 28.61. Agilent is scheduled to report earnings on November 20, 2022, and the estimated EPS forecast is $1.39. As far as the balance sheet is concerned, the debt cap of 34.9% is very manageable, and the cash ratio of 1.05 is adequate. Agilent blogger sentiment is based on 6 blogger opinions. The blogger sentiment is more bullish than other stocks in the healthcare sector. Bottom line, it is a good idea to start looking into the current tech sector as it could be an opportunity in the coming months. Several of these companies are currently undervalued and could be a bargain if there is a recession.